If you want to get rich, do exactly the opposite of what the masses do. The masses are sheep. When everybody buys, they buy. When everybody panics, they panic. When everybody sells, they sell. To get wealthy, you have to understand two cycles. One, feeding the sheep. And two, slaughtering the sheep. The recession is made to slaughter the sheep. Take their wool, take their houses, take their lives. Through easing and contracting the flow of money, the Federal Reserve banks go from feeding to slaughtering. And as long as the sheep follow, they are doomed. Do not be a sheep. Never think, act, or invest like the masses. Do the opposite, and you will be rich. Buy when the masses are selling. Sell when the masses are buying. The masses are weak, lazy, and worst of all, they trust their authorities, their governments, and their banks. Do not trust the authorities. Honor will come.
Welcome to Market Makers, everyone. Your home for tomorrow's TA today. Often imitated, never replicated. Big show for you today. Before we jump into it, guys, big announcement and a request. The request is give me a follow on X at Market Canary. It's pinned in the YouTube comments as well as the video description. I want to build up the X profile. Once I build it up, I'm going to do some Twitter spaces there as well to interact with you guys. We've had a lot of problems with YouTube, as you guys know, over the last year or two. It's imperative to me to build up that X profile. The big announcement, I'm going to start to make a second market update video every single week. But that second video, guess what? It's only going to be released on X. Now, if you're a member in our Discord or our website, that video will be there as well with my normal live stream. But that second market update video will be on X. Give me a follow at Market Canary. Now, let's start off, guys. Absolutely crushing the pivot lows in the marketplace. January 13th, we gave you the pivot low before it happened in confluence with the lunar cycle. Everybody thought the market was crashing. Market rebounded, new all-time highs. And then this last pivot low, we made the new low on the lunar cycle change on Thursday of last week. And then the 7-planet alignment on Friday gave you a slightly lower low. Remember, this is really key to understand how many pivots are coming up here in March. So we're going to talk about it in the charts. But let's start off with some sentiment indicators. So on Friday, we were at a 20 reading here on the fear and greed index. We bumped up to 30 with the rebound, right? But this, I think the market's going to make its big top here in greed or extreme greed. That's where it's going to make its big top, not in fear. And this is something important to understand. And as we move forward here to the M2 money supply, this is why the market has been rallying its liquidity in the market. Here you are at your 2022 peak. What happened after that peak, right? Or actually before the peak, the NASDAQ top, Bitcoin top, S&P top, NASDAQ and Bitcoin in 2021 of November, S&P in January 2022. And then what did they do? Bitcoin fell 80%. The NASDAQ fell 38%. S&P fell 28%. And then look what we have here on M2. It's been going straight up since your bottom. This is updated on a monthly basis. Since October 2023, you've been going straight up, but you're getting a little bit of a hinge now on the money supply. Lee, throw up the money supply article. M2 money supply posts its biggest gain in 30 months. I think the new all-time highs are still coming. New all-time highs for Bitcoin, new all-time highs for the markets. This is key to understand. And guys, throw up the other article, Lee. If you look at what's happening now with the GDP, this is something I wanted to share with you guys as well, because I've long said on this channel, you're going to start to see the real numbers of the economy. This is from Fortune magazine just on Friday, I think, or March 1st. The U.S. economy has suddenly been thrown into reverse as key GDP indicator flashes stunning negative forecasts. Just a week ago, the GDP was estimated to be 2.3% for quarter one, and now they're estimating it to be negative minus 1.5%. Why is this significant? This, of course, could change again. This is significant because 2 negative quarters of GDP, if this does in fact print negative, 2 negative quarters is the definition of a recession. Why does that matter? It matters because what is the historic drawdown in a recession? 33% for the S&P. You know Bitcoin will move at a beta to that. So we're going to go over some key things here in the market to help you understand what's happening, and its cycle, its price, and it's time. And I'm going to get into that with you guys in the charts. Give me a like, give me a subscribe, follow me on X. Lee, let's start the show. All right, guys, as we jump into the charts, take a moment, click the like button, hit the subscribe button, send it to your friends. Guys, if you want to support the channel and you want to trade, check out our two fantastic sponsors, SimpleFX. If you live outside the US, you get up to a $5,000 instant market makers bonus, only available with our link. You can trade everything there. And if you live in the US, check out Bitunix. You don't need KYC. You don't need a VPN. You are anonymous and you can trade all the cryptos. Those links are in the video description and the YouTube comments. Guys, the 3 hallmarks of the market: natural law governs the market, the law of 3. Again, Gann wrote about this over 100 years ago. Lee, throw it up again. Cycle, price, and time. What is a cycle? Look at my screen. This is S&P futures. Now, again, I've mentioned this before. How many people are you watching struggling in this box right here, the 2022 low, trying to find some type of wave count to make this all make sense as to what the market's doing? You have to zoom out and look at a cycle. What changes a cycle? One thing that changes a cycle is bubbles, right? You saw this in .com, the boom bust. You saw this in the GFC, the boom bust, and then the trillions that poured into the marketplace and stimulus and money printing. You saw it again with the pandemic. The cycles start, in my opinion, you guys are seeing this here because as this develops, you'll see more people start to pick up on this, okay? The cycle start was the pandemic. 36% sell-off here on the S&P, $7 trillion in stimulus pumped into the market. The market starts with the Gann market pattern, which is an ABC. You are in the C leg, the impulsive leg of the marketplace. Utilizing Fibonacci, we can look at price setups for this on a large macro pattern. And again, that takes us up to 6,441. Now, does that mean it has to hit 6,441? No. But remember, as traders, what are you doing? You are a sniper. You're laying in your nest. You're waiting for your victim, whatever it is you are hunting, to come into your sights, okay? We're not chasing the price action. We're letting the price action come to us, and we're doing that by understanding cycles, price, and time. So this is what I'm looking at here for a big trade in the marketplace, is to complete this move of this C leg. Now, a couple of key things to understand here on this ABC. 36% retracement from the pandemic. You rallied up, and we talked about this. This was a 120% move in the S&P, 6xing into your 2022 top in January, 6xing the normal 2-year move in the S&P. Again, a bubble, guys. So you 6x the move, and then you came down 27%, big impulsive leg up. Now, if you look at the red box over here, 25%, what does this mean? I told you I think we're building up to a major top. We're going to get into this on the daily time frame, but this is a macro pattern. We're building up to a major top. Now, if we retrace in this major top just 50%, right? 50% from this low here on the B leg, okay? If we do a 50% retracement, that is 1,600 S&P points. Massive, massive move, a 25% drawdown. Does that sound crazy? Because a normal correction is 10%. I've given you the different options, 10, 13% correction, up to a 30% correction, right? But does that sound crazy? It's the exact same move you did here after the 2022 top. You fell 27% throughout the course of the year, bottoming in the fall equinox before this C-leg impulsive move, okay? So this move, if we do this retracement, 1,600 S&P points is the same move as you did in 2022. Gives you a signal wave. If that happens, there's a couple of key concepts to understand. Obviously, price can come down, can chop around, it can come back up, can make a lower high. And then what's that? That could be called a dead cat bounce. It could be called a double top, right? You make a double top right there, have a nice leg up, leg down, come back up, fail. So that would be the market top for the cycle if that plays out. However, if it holds support at this level, slightly higher, slightly lower, 4,850 is what you're looking at on S&P futures, 25% drawdown, 50% retracement. If it holds support, guys, understand from a macro perspective, zoomed out, you have your low, pandemic. You have a higher low, 2022 bottom. This would still give you a higher low. You still have 3 higher lows. If that happens, let's go ahead and go to the next iteration here. You're forming a 5-leg fractal if that happens, okay? And you look at this from the perspective of big drawdown, low, big drawdown, higher low, big drawdown, higher low. And at that point, if that happens and you do rebound, then you're looking at 7,500 here on the S&P, and that's the price. The timing is the hard part. Is that fast? Is that slow? Does that take you out to 2027 spring equinox? I don't know that part. We're looking at different iterations of how the market can play out. What we do know is that on both iterations, you're coming up to a major top before a major drawdown, whether this is the 3-leg law of 3 pattern, the ABC, or a larger 5-leg pattern that is forming, okay? That's what we know. Major top is incoming. Now, when we look at this again on the daily iterations, pull down our cycles here, we have to remember when you're looking at cycles, you're looking at confluence with pivots as well, right? We've had key pivots. The January 13th low, everybody thought the market was crashing. I told you it was going back up, made a new all-time high. Overall, what are you doing right now? You had another low get put in again with the lunar cycle change on Thursday, right here, denote it here. Lunar cycle change on Thursday. You got a new low in the market. Then you had the 7-planet alignment. And guys, by the way, these are astronomical cycles. These are science-based cycles. Overlaying the science-based cycles with the natural law of the marketplace, and you can find inflection points. And it's okay if you don't like trading this way. It's okay if you don't want to understand cycles from this perspective, but you're missing something key, because this is how Charles Dow believed the market moved. Natural law, W.D. Gann, Benner, if you guys have seen the Benner chart, the great people that have experimented with cycles, done research on this, believes natural law governs the marketplace. So we have our 7-planet alignment, and now we have our rebound. Right now, it's still a muted rebound. It was a nice bounce off of this low, but overall, guys, what are you doing from a Wyckoff perspective? What are you doing from a market perspective? You're coiling, right? You're coiling for a move. That move will come to the upside or the downside. I believe it will come to the upside. The timing is the hard part, because we have cycle pivots coming up that are key here in March. March 14th, we have the total lunar eclipse. All the US will be able to see it. South America will be able to see it March 14th. So could we be chopping around till March 14th like this? And that gives you a final low for a rally up. Do we start a sudden spike up and then top March 14th? So these are all things that need to be considered when you're talking about cycles and pivots. And I don't know the answer. I can tell you what I think and what I think will happen. And then we can see how the market plays out. What I know right now is we held our low. We held a January 13th low. The market structure is bullish when you zoom out and look at it. My bias is we go to the upside. The question is, what do we do between now and the 14th? Do we continue to coil in volatility for the slingshot and maybe we break out on the 14th? Followed by March 21st, March 22nd, guys, we have the spring equinox, as well as the 18.6-year lunar precession cycle hitting on the 22nd. So March 14th, major pivot. March 21st, 22nd, major pivot. And those are all coming up. We're a few days into March. So will we see a spring out, or are we going to see more coiling and these pivots are going to launch us to the upside afterwards? That's the key thing to find out. Overall, what are my targets? They have not changed. Looking at 63.22 to 64.64, so 6,300 to 6,450 S&P futures with key pivots to come. We want to hold that low from January 13th at 58.09. That is key. And the longer you coil, the more energy you build up. Okay, key concept. The more energy you build up, you will get some type of catalyst, some type of stimulus, and I think this will break you out to the upside. Now, I've spent some time on that. Let's look at the NASDAQ. Same concept in the NASDAQ, guys. No matter if we get the big drawdown here, three-wave fractal, 39% drawdown. Crazy, right? No way, Brendan. 39% drawdown, all the way down, 72% retracement to 14,000 on NASDAQ futures. That won't happen after a top. Really? You did 37% in 2022. People act like that was 100 years ago. It was literally 3 years ago. You fell 37%. You fell over 30% in the pandemic. I think you're going to have a big fall. If the S&P falls to the 50% retracement, you're going to see the NASDAQ at least come to the 618 or deeper. 70%, 75%. I have this marked here, 39% retracement for the NASDAQ. Now, my target up here on the NASDAQ, 23,053. As you guys know, in the daily pattern, looking at 23,200 and change. But you're right now at 20,870. Okay, this isn't much higher, but you're seeing the market very tired. You're seeing the market get played out. You're seeing the recession indicators start to get picked up by the herd, the mass public, and they're afraid, okay? I think you still have a new all-time high coming, because I think you're going to complete the three-wave pattern. And if this pattern plays out, whether you get a 30% drawdown, 40% drawdown like here on my screen, and you hold it, remember, key concept, low, higher low, higher low, and this could extend into a five-wave fractal pattern. And if it does, understand my target up here is 26,900, basically 27,000, right? Again, cycle, price, and time. Does that trade anything for the top? Nope. Does that change anything for the top? I should say, nope. Looking for a short once my top targets are met. And again, just like on the S&P, the ability to long as we retrace and come down and then ride this wave up if it plays out this way. If it doesn't play out this way, just like on the S&P, guys, what does that mean? Could be making a lower high. If you make a lower high, guess what's happening? That was your cycle top, that was your market top, and everything's downhill from here, and you're crashing. Remember, NASDAQ fell 80%. And .com bust, okay? So these are the things to understand. We're coming up to major tops in the NASDAQ, in the S&P, in Bitcoin, and you're going to see it play out in the charts. If we look at the NASDAQ here on the daily chart, how is this going to rebound? I think it's going to rebound in a W-type fractal, okay? I think you're going to move up. Maybe March 14th is that wave 3 here. So you have your move up off your low. You come up, you're going to get a pullback, and then you're going to extend out to your target, okay? The same way you saw this play out over here. This is what we're looking at, and that target still was not met from the larger W pattern, 23 23.2. So this is a level, 23K, 23.2 to be specific, looking in that level for price to get to, and watch for this fractal to form. Drew it ahead of time just so you could see it, but this could be coming in the cards to a theater near you. Okay, the level to hold, you took out your January 13th low, NASDAQ's beta. Bitcoin is beta. Your new low is 20,460. You want to hold that low. But most importantly, you want the mother market, the S&P, to hold its low. What does this mean for the SPY? Still looking at 642, guys. 642 on the SPY completes my large ABC. That's what I'm looking at. SPY at 593. You want to hold 575, January 13th low. What does that mean for the Qs? 559, you're at 507, right? Again, if the Qs go nuts, it's because the NASDAQ futures went nuts, could come up to 603. But 559 is that next key target, completes the ABC, completes the W fractal. These are the levels to watch for, very important levels. What are the international markets doing? They're outperforming the U.S. markets year to date in 2025. Look at the German market, the DAX. The DAX, very important. Retail loves to trade the DAX. Look at our giant ABC. We hit the 1618, 21,457. We hit the 1.8, 180%, 22,956. We got some retracement. I think we're coming up 24,622. Completion of the giant ABC, a doubling of the range. Important to watch because the DAX, the European markets, will not be making new all-time highs when the crash starts with the S&P. When the crash starts for a major retracement, everything comes down. You saw it just with what's happened recently in the marketplace. Everything comes down when the largest market in the world craters. Let's look at Bitcoin, guys. Look, I think I'm the only person showing you this pattern the way I've had it laid out now. I don't know how long it's been. Has it been a year yet? But 3 peaks in a domed house. Peak 1, peak 2, peak 3. Okay? The domed house is a 5-wave pattern, or as many of you would know it, a head and shoulders pattern. And I'm still looking for the sprint up. And we have new Fibonacci's that can be drawn based on this large retracement. Where did we retrace to, by the way, guys? A lot of people freaked out on this retracement. We retraced to the 50% off your lows. This is a 3-day chart, but on that 3-day candle, that low was set August 4th, okay? Came down 79,442, just below, bouncing back up. I think you have higher targets here in the layout that I have. You're looking at 120, 132, and we're going to look at this from a couple different perspectives and look for confluence, okay? This is a 3-day chart of Bitcoin. Now, one thing to look at as well, let's go ahead and erase this, all right? Well, actually, we'll just add this on. If you're looking at another pattern here, another pattern that's very important in the market, 3 waves to a top. Again, law of 3 pattern, okay? Wave 1, off your cycle low. Wave 2, off your accumulation and Wyckoff. You have a wave left, right? Wave 3. Where will this wave 3 go to? I think you're going to 130 to 140. And how can you measure this? Well, you can quite simply measure this. Let's go ahead and remove this so you can see it. Remove the domed house. But you can measure this. Go to your second or your latest all-time high. Pull your fib projection back to your previous all-time high. Look at the 1.62, the 1618, right on top of the 200%. Do you see that? Again, confluence, literally almost to the dollar on top of the price action at 132. And where does the 200% take you? 146, 132, 146 would be my Bitcoin target, and a 3 waves to a top pattern. Again, I believe higher prices are to come. You have to understand the timing is what we need to figure out with all the pivots in the marketplace. That March top may extend. It may take longer to get there, but I believe these higher prices are happening, okay? So that's something else to look at, the 130 to 142 here in the marketplace. And if you look at this from a perspective, and people have a hard time understanding, this is trading the market with market geometry. This is market mathematics, right? When you talk about doubling a range, I just want to show you this. What are we truly talking about here? We're talking about something like this. What we just showed you with that fib projection here, we're looking at this, right? If you look at a doubling of this range from your cycle low to your previous all-time high, this is going to be a rough estimate here because didn't match it up perfectly to the dollar. Let's go ahead and draw this. So your previous all-time high right about there, okay? This doubling of the range, you could just simply pull this trend line if you don't understand Fibonacci. That's what the 200% is on the Fibonacci. Let's attach it, right, to the ceiling. We'll attach it to the ceiling. That's what doubling the range is, okay? From your cycle low, you're doubling the range up to 132. You see that? By the way, guys, I'm teaching the ABC education course in a live stream this week on the Discord. Highly suggest you check it out. I think you're going to enjoy it. How to understand these Fibonacci concepts, especially related to law of three patterns. And I'll be showing you this on Fibonacci. Your first week is always free. Go to marketmakers.trade and check it out. So that's doubling the range in Bitcoin. Let's go ahead and move forward. When you look at Bitcoin from this perspective on the daily time frame, again, nothing has changed in Bitcoin for me. You had the accumulation. We broke to the downside. By the way, I read 80% of the liquidations that occurred on this move down from 109 down to, where did we get to? 78, 77K. 80% of the liquidations, a Pareto distribution, occurred on people that bought Bitcoin in the last 90 days. This is how markets work. 80% of people lose money. This is why it's important to have some type of narrative to track to see if you're successful with what you think is going to happen to the market, okay? Now, when we pull our fib here, I'll go ahead and do it for you guys so you can see it. We're going to pull from 109. This is a daily time frame. Previous chart, 3-day chart, looking at the macro patterns. Let's see if we get confluence. We're going to pull it to that new low, right? So you have your all-time high down to your new low. Look where your prices line up. 129.6, so 130, 200% at 141. So again, 130 to 142, whether it's the daily, the 3-day, the weekly, based on my macro patterns, these are my upside targets for a blow off top and then a very large retracement to follow, okay? And again, the way I think Bitcoin's probably going to recover, similar to how the Nasdaq's going to recover, similar to how the S&P is going to recover, is some type of W fractal. You may be making it here, you get some type of retrace, everybody thinks it's going back down, and then you're going to level back up, right? And the key level to get above is 101. Get back above 101, puts you in this corridor up here of these candles with these peaks up here, and then start to do your dance up here at a higher level. Then the breakout to these higher levels, okay? I think it's going to be a level change to get back above 100K, get in this new corridor. You're at 90K right now. Obviously, there's new stimulus coming out about, the crypto reserves and whatnot. You got an elongated pump, but this is what you have to do from a technical perspective, in my opinion. Get back above 100K, coil up here, and take the breakout to the upside, not the downside, okay? That's what has to happen in these marketplaces. All right, guys, hope you enjoy this video. And again, look for the second market update this week on X on Thursday. ABC Education on the live stream on the Discord and the website coming this week, I think on Wednesday as well. All right, guys, I'll answer your questions as always, and I'll talk to everybody on the next one.